Let's take a look at some charts and information on Stellar for Brave New Coin. So last month I had a bit of a hiccup in the network where certain validators were dropped off the network. Now they maintain that decentralization is still representative of the network, although they may have some increased liberties and utilities from the top down when it comes from redeploying code or upgrades or protocol stuff. Stellar is most similar to Ripple. It is trying to diverge in many ways and forms from Ripple. Ultimately, it trades a lot like Ripple price-wise. And ultimately, any SEC news relative to Ripple will affect Stellar because, again, they are pretty highly correlated. And if you look at the last Ripple-related price action around the SEC announcement, Stellar basically followed suit. Now, Stellar is a bit different in that they don't have an escrow of 50 billion tokens. They have a burn wallet where they sent those in late 2019. So they took the high road. They said, we're not going to try to profit off of this. Instead, we're going to try to decrease the eventual total supply by sending this to a burn wallet. I think it's a better move. I don't know if it saves them from regulatory scrutiny, but I think it's a better move. So here's the total supply, 50 billion. Non-circulating is still greater than the circulating, so keep that in mind. Does this represent a store value? I don't think so. Neither does Doge. Sorry, the same rationale and reasoning. There's just too much circulating supply, too many individuals that own too much as a total percent of the network. So since their issue with the network, they've upgraded to a new protocol version, and thus far, things appear to be going swimmingly. This was as of April 8th. So if you're unfamiliar with Stellar, they do have a variety of things that pretty much every network is trying to get. It's got a DEX, it's got atomic swaps type characteristics, it's got identity stuff, it's got multi-sig, this Lobster thing I'd never heard of, 2FA key recovery with a custodial Stellar wallet. Here are the DEXs. And I'd say in general, they don't push for corporate involvement like Ripple does. If you're looking for yin versus yang here, Stellar went the smarter route. I think they're going more everyman versus Ripple, which is targeting banks really for like interbank settlement, that sort of thing. Kelp, that's cool. Make markets with your own open source trading bot. So I haven't looked into most of this stuff individually, but as long as you're aware that it exists, they are doing their best at the DeFi game. Certainly. If we look at the total supply and total amount of circulating supply, again, circulating supply keeps creeping up, which is normal and natural. I don't think there's a fixed inflation value or anything like that. And it looks like total holders, as far as individually wallets are concerned, continues to increase. And the numbers overall on chain are pretty mediocre. I mean, if I'm to believe Coinmetrics, which I do, and I look at the transaction counts for Stellar, in the line graph here, big jump up post-November and then fell all the way down post-January. This could be a general DeFi effect as far as the DEX is concerned for Stellar versus other coins. I mean, ETH is just sucking all the fun out of the room for anything that's not doing what ETH's doing. So it makes sense to see transaction counts way down on chain. This big jump in average transaction values in the fill here was when they burned all those tokens in late 2019. And thus far, average transaction values have been rangy, but haven't really done anything that's exclusively bullish. Ideally, you want to see jumps like this throughout any bull trend to support price as far as new people coming in, speculative activity, any sort of thing like that you will see on the on-chain metrics here. So in a vacuum, if I'm looking at transaction counts declining from 5 million to 1.5 million, that's not a bullish picture. Unless there's something going on here that I'm misinterpreting, it's hard to get bullish on price when you see that. NVT and active addresses, on the other hand, do look okay. So previously they did have a proof of stake type component that they voted to remove. Again, another type of supply type control mechanic, I think. It's hard to know what the people from the top are really thinking when they are burning coins, or they're saying, let's remove inflation. Or in ETH's case, let's start burning, right? Let's start burning some coins. That'll help the narrative, stuff like that. But at any rate, active addresses fell pretty considerably from 2019 and 2020, and have just sort of flatlined here in 2021. Again, not really supporting a bullish move. Just to give you an idea, when you look at active addresses on something that's bullish, very clearly, it's like, okay, I get it, right? This is ETH. We were bullish in 2017, 2018, bearish after that, and then since 2020, active addresses on ETH have continued to moon. You compare that to Stellar, and it's perhaps more understandable why things are the way they are. The underlying usage of the network will support price. It's not really a secret. So if I were to get bullish, I would want to see active addresses increasing substantially. NVT for Stellar, much like Ripple, looks extremely bullish, but you have to keep in mind they do move large swaths of XLM in and out of various custody wallets. SDF Development, SDF is the Stellar Development Foundation. So there's a lot of on-chain activity here that is less due to organic activity, I guess you could say, and more related to the custodians of most of the quote-unquote non-circulating supply. This big dip here especially was when they burned all those tokens, it dropped NVT to an all-time low. So it's hard to really know, do we even care about NVT for stuff like this, right? But let's say we do. It is looking more bullish than 2019 in that NVT has continued to decline. And that's generally a bullish picture for any asset. If we look at sort of the big boys, who's trading Stellar? I didn't mention Grayscale for Ripple specifically, but again, if Ripple gets listed or relisted in some of these products, Stellar will probably benefit from that as well. Stellar is currently in the Grayscale family of products in a trust, one of the medium, smaller size trusts for Grayscale. Number one being Bitcoin, number two being Ethereum. So not a big appetite for Stellar amongst the group, but surprisingly larger than things like Link and Filecoin, BAT, some of the newer DeFi-related coins. Bitwise 10 also has an index with constituents comprised of mainly Bitcoin and Ethereum, but they also have Stellar in here at less than 1%. And again, if Ripple gets relisted for whatever reason, some of these bigger indices or products will likely have to decide, do I add Ripple again back to this, Bitwise 10? They'll have meetings and figure that out. But Stellar will benefit from that, undoubtedly, if the SEC stuff for Ripple cools off. Here's Stellar, the protocol, not just the word. Google Trends, how this works. In generally, you'll see spikes in price with Google Trends. Looks like retail coming and exploring all things Stellar in this case, or Doge. Again, if we compare, it's always a good idea. What does everything look like? Dogecoin's under software. What does everything look like now relative to everything else? Why are things the way they are? Here's the Doge Google Trends, and it's just, I have no words for this. I have no words for Doge price either. The only reason I bring it up is because it's so different than everything else. But, if you're wondering if you're Stellar Maxi, or you like Stellar or whatever, there's a reason why Stellar kind of looks like every other Google Trends that's normal right now. Even Bitcoin looks relatively similar to this. So this is more of a normal type of curve, and Stellar is well within those range limits. So it's not like it's being ignored or anything like that. But as this gets more bullish, you'll start to see highs or higher highs in price, along with higher highs in Google Trends. So it's always worth taking a look and checking this out, because sometimes this does lead price and sometimes it doesn't. But it's always worth just poking around every once in a while, seeing what Google Trends look like. Let's transition to technical analysis here. I have the moving average multiplier, quickly becoming one of my favorite indicators, because it gives me a ceiling for price based on backtesting. Once all these things hit all-time high or price discovery, you kind of don't have anything to really use other than fib extensions, pivots mainly, or maybe. So I like this indicator, and it gives you a buy zone and a sell zone ultimately. This is the 183 moving average down here. The red line represents the 5x multiplier. And this does need to be backtested and curve fitted, depending on what you're looking at. For the most part, the 5x multiplier for crypto has picked out the tops pretty well. So previously in 2017, twice when it hit those two all-time highs, it was well above the sell zone. Currently that sell zone is at like $1.60, so at least the 3x from here still. So just based on this, I'd say, okay, you know, Doge did what Doge did, right? So why can't Stellar do what Stellar could do as far as benefiting from altcoin season, benefiting from rotation? This isn't a high conviction expectation. This is more of like a gamble rotation sort of situation where, you know, everything else has moved. Stellar certainly moved, but it hasn't exploded, right? Like some of this other stuff. So you'll start to see rotations into stuff like this. Even Ripple, regardless of the SEC stuff, you're going to see people moving into that. Especially because it's less than $1, so the integer bias is strong here. Looking at the 50 and the 200 cross, historically it's actually been pretty good at getting you in and out fairly cleanly. Even during this consolidation in 2018, it told you to get out and stay out. It didn't tell you to get back in until 2020. I mean, what do you want in an indicator besides that? Saved you all of this pain and get you in close enough to the bottom where you're fine for the upside. And you're basically 10x from the 5200 cross, you know? So if this looks good on backtesting, it's hard to ignore this type of trend analysis for anything. The 200-day moving average is currently at 35 cents. That would be a good dropping off point. By the way, this is on Poloniex. That's why the ticker might look different, STR instead of XLM. I don't know the exact rationale between why they changed the tickers, but my guess is they wanted to, again, distance themselves from the Ripple problem, where Ripple and XRP are both a company and the name of the token. So it's a bit ambiguous in that regard, maybe on purpose. And Stellar less so. Not that I'm a bigger fan of Stellar, but just trying to think of like, what's the rationale here? Anyway, so 5200 still bullish. We're quite a ways away off from the 200-day moving average. And it has been unable to make a higher high really on RSI since late last year. So any new highs, you're going to want to see a definite breach in that downtrend of RSI. Otherwise, you're going to paint a bearish divergence and an expectation that the bullish move is weakening. Below 35 cents, there's support at 22 cents based on VPVR, and then the ultimate support is at 10 cents, basically back where consolidation occurred throughout 2019 and 2020. Looking at the cloud on the daily, it has told you rather nicely when to get in and out as far as paying attention to the TK cross recrosses. This is something that I'm personally waiting for on BTC currently. You get a Kumo breakout and you have the bullish TK cross on your side. Quickly you get a bearish TK cross followed by a bullish TK cross, and it tells you to close your long, reopen your long, close your long. Sometimes it's a very tight dance, a very close give and take, and then other times it's just a complete trend buster to the upside. So it told you to get back in late last year, maybe get in and out again in January, get in and out again in March, and currently it's trying to figure out, will this be bullish continuation or not? Just like the BTC USD chart on the daily, same thing. You know, you're looking for the same sort of crosses here on the TK lines. All in all, you know, this makes me the most bullish. This gives me the most hope for just absolute insanity upside. As long as we don't see a bearish divergence here, should be good to go. Stellar BTC, here's another chart that is super clean as far as telling you when to get in and out on, this is a 3-day, some random time frame, but using the 5200 period crosses, tells you to get in and out here, and it's told you to stay out until very recently. So this may cross, you know, it's going to take another 12 days maybe to cross. And this whole thing has been a giant mess. It looked like it wanted to break up here. It looked like it had an inverted head and shoulders. It looked like it had an Adam and Eve, all that stuff, but none of that mattered. Attempted to break out again. That SEC stuff for Ripple knocked it down. And right now this just looks like, you know, I don't know, maybe another Adam and Eve, but the moving averages are really what I'd be watching for a move to the upside here. And you'd have to expect at least a 2x. This is a multi-year consolidation at this point. So you'd have to expect at least a 2x, probably somewhere between 2,000 and 2,500 sats as far as the move is concerned. So I definitely like upside. And here's the cloud, again, painting that level at 2,300 sats. So all in all, the fundamentals for Stellar are maybe weaker than ETH or ERC20 or DeFi on ETH, but it's not non-existent. On-chain fundamentals are weak, that's for sure. Stellar is still included in Grayscale, Bitwise 10, any large index fund. Google Trends look like most coins where price hasn't exploded just yet. And technicals for the USD pair look rife for bullish continuation. And the Stellar BTC pair definitely looks like it's potentially ready for a 2x in the near term, certainly within the quarter. Sometime before July, I'd suspect you're gonna know rather quickly whether or not this edge-to-edge move is gonna work out on the BTC pair. Lastly, I'll just mention the Enzyme BTC fund on, or the TCAP Enzyme BTC fund on enzyme.finance, where I manage currently 4.4 million in AUM. And this is a non-custodial portfolio management tool where you can send ETH or USDC. All of the actions, performance, allocations are transparent. You can see who gets in and out and when. You can see trades that I make, all of which occur on DEXs. We also have a DeFi portfolio, which includes 15 to 20 DeFi assets as well. Same story there. You can see all of the performance allocations, deposits, withdrawals, and trades. No minimums, no maximums. You only pay gas on your way in and on the way out. And I pay the gas, the fund pays the gas on all of the trades made in the portfolio. So that's all for this one. Like, dislike, comment, share, subscribe, and happy trading.